update on our business and performance. I would like to express my gratitude to all our stakeholders for being a part of this great growth journey. I'm pleased with the performance our team has achieved during the quarter, despite the challenges of the third wave of COVID and the geopolitical tensions which has disrupted supply chain all over the world. We recorded the highest revenues in our company's history of rupees 421 crores in FY22, a growth of 14% from FY21. Your board has recommended a dividend of rupees 4 per share. The growth this year was primarily driven by robust volume offtake, introduction of new products, and entry into new geographies to cater to both global audience and Indian diaspora. Product development and innovation is the cornerstone of our business. In this line, we've created a new brand named Khansama. The product range in this brand would comprise of kebabs, curries, breads, and pastes. Going forward, we will continue to focus on the following key pillars to achieve a sustainable and a profitable growth. 1, increasing capacities through greenfield and brownfield investments. 2, strengthening our distribution network. And third, growing our agency distribution business. Our investment in distribution centers and warehouses to engage in direct distribution has helped us gain better control of our supply chain and enables direct reach to retailers, thereby pushing our products and retaining distributor margins. In this regard, we've also acquired a land parcel adjoining to our Nadiad factory to expand our existing cold storage facility. We are at an inflection point where growth through opportunities like supplying through e-commerce, supplying to QSR, cloud kitchens, inorganic acquisitions, all are being actively assessed to take the next step in our growth journey. At ADF, we believe in maintaining high quality standards, introducing new and innovative products while remaining customer-centric. To further support our e-commerce initiatives, ADF recently incorporated a new subsidiary called Telluric Foods to buy, sell, and distribute food products through e-commerce and/or other business channels in India. Also, our alliance with Patanjali Ayurveda for exclusive distribution for their products in UK and Western Europe markets will come into effect in this current financial year, increasing our reach to growing Indian diaspora in Europe and UK. To conclude, I would like to reiterate that we will continue to remain disciplined and maintain prudent financial services practices while we aim to execute our growth initiatives. This is all from my side, and I'll hand over the call to Shardul for the financial update. Thank you.
Thank you, Bimal. Good evening to all of you. In Q4 FY22, our revenue increased by 5% to rupees 108 crores compared to the same quarter last year. Also, our gross margin increased by 25% to rupees 57 crores as compared to the same quarter last year. For Q4, our Ebitda stood at rupees 15 crores and PAT at rupees 11 crores, which translates to a PAT margin of 10.4%. As far as full year FY22 is concerned, our total consolidated revenue stood at rupees 421 crores, a growth of 14% Y-on-Y. Out of this, our segment processed and preserved food revenue increased by 14% to rupees 335 crores, and agency distribution segment increased by 12% to rupees 86 crores. Gross margin ratio increased from 42% to 50%, which stood at rupees 212 crores, a growth of 37% Y-on-Y. This was achieved due to better product mix and price action. This helped us neutralize impact of freight cost and raw material inflation significantly in the current year. Our Ebitda stood at rupees 67 crores, PBT stood at 65 crores, and PAT stood at rupees 48.5 crores, which is a slight decrease of 3% Y-on-Y, and PAT margin stood at 11.5%. We continue to maintain a robust balance sheet and are a net debt-free company with healthy returns ratios like ROC of 19%, ROE of 23%. Segmental ROC is as follows. For processed and preserved foods, 34%, and for agency distribution, 18%. This is all from my side. We can now open the floor for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. First question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Sir, any top line comes from Patanjali in Q4?
No, nothing has come in from Patanjali in Q4.
And what is the expectation for financial year 23 from Patanjali?
Well, we estimate the first year to be around anywhere between 1 to 2 million pounds.
Oh, 1 to 2 million pounds.
Yeah, it's just being launched in the market. It's still not known out there in that region. So we hope to be at about 1 to 2 million, and then we will scale it up.
Okay. Sir, how many incentives we received in PLI scheme in financial year 22?
Shardul, do you want to take that, please?
So we have a eligibility of almost 8 crores to receive under PLI in FY22.
But it will receive in current year, right?
Yes.
Okay.
So we have booked revenues, PLI revenues. It will be around 7.5 crores in the last year.
In the last year. Okay.
Yeah.
Thank you. Thank you very much.
Thank you.
Thank you.
The next question is from the line of Sanjay Avatramani from Envision Capital. Please go ahead.
Yeah, thank you for giving me this opportunity. Sir, I just wanted to know that the last 2 years we are making margin around 18.5, but this year the margin has contracted by 3%. Any reason for this?
Sorry, could you repeat it? You weren't very audible.
Okay.
The margin.
Yeah, the Ebitda margins have been reduced by almost 3% in this year, FY22. So any specific reason that there is a decrease of 3% in this year?
So the main reason for that has been, I'm sure you would be aware that there's a huge supply chain disruption all over the world. Freight rates have gone up through the roof. Input costs have gone up. Despite all of that, we've still been able to maintain a healthy Ebitda margin by we put in a price increase. We were able to create a product mix. So that is the main reason for this reduction. We continue to face this pressure even in this year, but we are again looking at a further price increase happening in this financial year as well. And we will again continue to try and cut costs, do a better product mix, and see that we try and get back to the same kind of levels.
Okay.
Also, just to add, Sanjay, I'll just add to this. In terms of absolute numbers, we have maintained our profitability. I'll give you a simple arithmetic. If my cost is 100 on my sales is 100. Cost is 80 and sales is 100. If cost goes up to 90 and I increase I pass it on to the customers. My sales become 110. So 90 divided by 110 actually will become 82% cost. So the margin looks lower, but in absolute terms, I still earn 20 rupees on the product which I was selling.
Get this. That's a higher base. I agree with you.
Yeah.
So next is that for FY23, can we expect the margins to be in the range of again 18 to 20%, or stick to this 15 to 18% range?
It's a very volatile situation, Sanjay, everywhere. Commodity prices have gone through the roof. We are obviously going to do our best to get it back to the previous levels, but the situation continues to remain volatile. But we are doing our best. Like I said, we are going to put in a price increase and try and see how best we can cut on costs. So that's all I can say.
Okay. This is, great. And next is that you said that we have been in tie-up with Patanjali. So what is this exactly we are doing with Patanjali? You said that we'll be doing for UK and Europe region. So what exactly we'll be working on? This is a revenue share. What is this exactly? Can you please elaborate on this?
No, so we will basically be distributing their products within the ethnic Indian stores. So we'll be buying product from them. Our UK entity will be buying product from them and then distributing it. So it's a distribution arrangement.
Okay, just a pure distribution arrangement, nothing else.
Yes, that's correct.
Okay. That's all from my end. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Abhishek Singhal from Rnd Investments. Please go ahead.
Good evening, sir.
Good evening.
So my question regarding to any inorganic acquisition in your cart, if yes, so when executed?
So, we continue to evaluate opportunities, and we are having conversations with a couple of people. So I hope we are able to do something in this first quarter. But the discussions are going on at the moment. That's all I can say.
Okay. Second question regarding to in quarter 4, 10,25,000 promoter share placed. Is this any specific reason, or when it will be free from place?
So, as you are aware, there were warrants which were issued, and this pledge was basically done to for paying off the warrants. So we hope to clear this off in the next 1 to 2 years.
Okay. Thank you, sir.
Just to add to this, the promoter holding is now up to 36.5% compared to 31.5% 2 months back.
Okay.
Mr. Singhal, does that answer your question?
Yes. Okay.
Thank you. The next question is from the line of Raj Oja, individual investor. Please go ahead.
Hi, thanks for the opportunity, sir. Sir, I would like to ask, are we planning to grow inorganically, considering that we have a huge cash and bank balance in our balance sheet as of now? 80 crores, I believe. So are we planning to go, are we open for any kind of acquisition going forward? And my second question would be what kind of interest are we receiving from this cash and cash balance? Can you please put some light on that, sir?
So, yes, as I mentioned earlier, we are actively looking at inorganic opportunities. So when something does happen, we will announce that. I didn't get the second question. If you could please repeat the second question.
So we have bank balance also, sir, right? So just wanted to understand what kind of interest we are receiving in other income. Breakup of that is possible. Can you provide?
Shardul, can you please?
We get around. See, the money has been invested either in bank fixed deposits or into the mutual fund with or arbitrage, and we get between 4 to 5% return right now. Since this is all temporary and will be used for acquisition or for our internal growth or capex we are doing within the company.
Okay. And my second question is a broader question. How would the management look forward with regards to raw material price and logistics growth? Lots of articles and information what read. I just want to understand from the management how going forward this logistics price and raw material price will it ease, or what is the outlook of management on this?
So the situation remains volatile, especially on the commodity prices. It continues to remain volatile. As I mentioned, we are putting in a price increase as well, and because we are large buyers and exporters, so we still get a preferential rate when we negotiate with shipping companies or even with our vendors. But the situation continues to remain volatile, and we hope it gets better.
Okay, that's it, sir. Thank you.
Yeah.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Nilad Sabnis from Sabnis Financial. Please go ahead.
Yeah, hi, good evening.
Yes, good evening.
Yeah, so first of all, I would like to compliment the new presentation, really well made and informative. And as a first time viewer, it really introduced me to the company quickly and properly. My questions are more macro based. So I have 2 questions, and the first one is around the QSR space, which is of course growing at a rapid pace, not just globally but domestically as well. And it's a very exciting space to be in. So in the QSR, we have cloud kitchen concept growing by leaps and bounds. So do you have any plans of entering this space, and do you see any strategy to approach these avenues and grow further?
Yes, so you're absolutely right. This space is growing tremendously, and we want to be part of this growth. So as I've mentioned, we are actively pursuing this because we have all the infrastructure to cater to their needs. So we have, in fact, we already have our first order with one of the domestic chains. In fact, just last week is when we received our first order. So we hope to continue to keep growing in that space. So we are actively pursuing this vertical.
Oh, great. Good to know. So the second follow-up question also. It's not much of it's a space which is not very crowded yet, and it may give an early mover advantage.
So you're absolutely right again, and our US subsidiary has already been doing these plant-based products. We have a product called meatless meatballs, which we do in the US, and in India also we are in discussions with various people for expanding our product range into the plant-based. So yes, we will be doing that. But again, we're currently looking at only the export market, the international market, not for India as yet. But we will be looking at sourcing from India.
This is the operator, Mr. Sabnis.
Sorry?
Hello? Yeah, those 4 questions from my end. Thanks for
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Behzad, individual investor. Please go ahead.
Yeah, hi. Congrats to the entire team. I just have a few quick questions. The first question is basically in regards to the R&D. We launched new products, so let's say something like a Khan Pharma. So I just wanted to understand, is any R&D done before, or is it a trial and error perspective, saying that, okay, you know what, the market accepts the product before you decide to scale it up? And just a follow-up question also, you have a very healthy board. I just wanted to understand any plans on leveraging the expertise of the board in terms of new geographies, say something like upcoming growing economies, something like Kenya, something like Uganda, where the presence is a little bit less. So any expectations over there? Those are the two questions I have.
So as far as the R&D goes, we have a full-fledged team for R&D. So it's not really a trial and error thing. We have chefs who are there. We have a focus group where we try out the products. So there is a lot of work which happens before the product is launched. Yes, after it's launched, some fine-tuning can happen later, but a lot of homework is done before we launch products. Okay, and as far as the board has, we've got a great board, and we always they're always there to guide us and help us implement our growth strategy. So they are very involved and help us wherever possible. So we continue to seek their guidance and help and let them help us with implementing our goals. So the Africa market is something, again, which we are looking at. We do a little bit there, but we've not been able to actually grow. We have to find products which will cater to the masses out there.
Got it. Just this is the last question, if you don't mind. Any idea? So I believe Patanjali can be used as a leverage to enter into that market. So can I just get any idea? Is there any plans of the company to do that?
You're talking about Africa?
Yes. I'm talking about it.
So no, we haven't explored that, and that's something which we can definitely check. If there is an opportunity for that, for sure, then we can we'll have a discussion with the Patanjali team. At the moment, our arrangement with them is basically for UK and Europe.
Got it. Okay. All the very best, and thank you so much.
Thank you.
Thank you. Participants, to ask a question, you may press star and one. The next question is from the line of Raj Shah from Global Investments Corporation. Please go ahead.
Hello.
Yes, please go ahead.
Hello. Good evening, sir.
Yes, good evening.
So could you please tell us about this new subsidiary which has been incorporated? Going forward, what is the roadmap and future strategy for it?
So this is going to be our e-commerce platform, and we will be selling products through that, and we'll also be looking at other products which we will sell through this platform.
Okay, and what would these other products include?
So, like how we've got a vertical for taking on, for example, distributing the Unilever products or Patanjali products. So we will explore other products. It could be imported products. It could be products from India, which we will sell through this platform once this platform is established.
All right, and
the first thing would be to launch our own products. The first would be to launch our own products under the sole brand, and then we will keep adding on more products through this platform.
All right, and how are we looking at the margins in this entire segment?
So, we are right now at the business plan stage, but we will be looking at healthy margins on this. Initially, the company may not make the first 1 or 2 years because it will be in investment mode. The company may not have profits, but after that, we look at we will have a good profit coming out of this business as well.
Okay, so if I could just add on to this, what is the total revenue potential we are expecting from this subsidiary?
So the first year we are looking at anywhere between around 5 crores to begin with,
Okay.
and then in the next 4 or 5 years we hope to get it up to at least a 50-60 crore platform.
All right. Also, on the front of marketing and promotion, so I would like to know, like, in the next few years, how do we see ADF? Because there's a lot of competition in this sector, and there's a lot of advertising and promotion which happens. So how do we look at our products being marketed in this heavy competition?
So our company has been, firstly, I'm not sure if you're aware, but we've been granted under the PLI scheme for marketing, where we've got 62 crores, which has been granted to our company for marketing of our products. Our company has always been marketing our products in the international markets. We have a full 360-degree approach. We do TV advertising, radio advertising, digital, in-store advertising, in-store displays, and also sampling. So that's something we've always been doing, and now with this PLI grant, we will further increase our spend.
All right, sir. Thanks a lot. I'm a user of the product, and I really love the entire segment. Thanks a lot, and keep going ahead with the great work.
Thank you. Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to Mr. Bimal for closing comments.
Well, thank you very much, and hope to catch up with you all in the next quarterly earnings. And be safe and take care.
Thank you. Ladies and gentlemen, on behalf of ADF Foods Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.